Hi, and welcome to the Market Rag for Thursday, January 17th, 2008, the day of the bloodbath. S&P down 2.9%, Dow down 2.5%, and the NASDAQ down about 2%. That's 300 Dow points we were down, and it was just an ugly day out there. You'll see bonds got a little action off of that, being up a little over 1%. As we come over here to the broad market sentiment grid, it's not looking very pretty, you guys. You can see we're in the lower part of all these ranges. This downtrend continues to just kind of get worse. We still have pretty good uptrends across the board here in commodities, except for oil, just slipping here a bit, but now kicking in an extreme low signal. So if you're short that, keep your guard up. As we come over here to a chart of the S&P, I want you to remember a couple days ago we get these inside days and it was up 175 points and everything looked great. Well, this is why you don't read too much into inside days. Look at the crash that followed. We had a little bit of a pause yesterday and then a big move down today, blowing through this old support area. Here's a chart of oil, and again, big move down after that new high, but we're now at an extreme low signal, so if you're short this group, watch yourself. Gold, put in a little inside day, but we're pulling back to this area. And looking at bonds, still struggling with this prior high. A kick above that would be an uptrend for sure. As we come over to the sectors, two interesting ones here. We have energy, which is in a longer term uptrend, and utilities, which is in a longer term uptrend, both kicking in extreme low signals. Besides that, everything out here is pretty ugly. Healthcare, probably the best looking group right now. These utilities, except for they got crushed hard today, and I'll show you a chart of that. Telecom continuing its move down, being down about 2.5%. One of the bigger losers on the day, being down almost 5%, was the material area. Bounced around this old support area, but once it got underneath it, it was a free fall. Big move down in energy as well, about 3.5%. Technology, which just got under this support area, held in pretty good today, being down only a little over 1%. Coming over to utilities, we were down about 4%, and again, this was one of the stronger areas there. Notice this huge move through the support area. After failing to make that new high and sentiment being so strong, if they don't start buying it then, things can get ugly fast, and that's what we saw in this group today. Here's healthcare. Even though it didn't get crushed, being down only about 1%, we're still sideways and it's still one of the better looking groups, even though it's not going up. Taking a look at our portfolio, we're sitting pretty nice. You can see we're up about 3.5 Rs on these short positions we have. We were looking good for today's action. About 60% of our cash in the market short. I have gone on and moved a couple to break even and squeezed a few, so we've gotten most of this projected risk out of the system. Fridays can be kind of ugly, so I'm rolling the dice here a bit. I'm going to hold through, keep my stops where they are, and try to deal with them this weekend. But we will want to start booking some profits early next week. To kind of sum this up, I'm going to go ahead and keep my market rating at a -2. Even though we had a big move down today, Fridays can be weird, and on the other side of the coin, it may drag out into next week a little. But I don't think this downtrend's over, and I still think we got some more room to the downside. The portfolio rating is still a 0 because we're under those moving averages. If we could book a few of these trades, we'd get that back going. You guys enjoy the rest of your evening, and we'll see you Sunday night.